You have a single sentence in your note that nails the mood. I need to find my idiosyncratic opportunity. Where is the mother of all idiosyncratic opportunities right now?
I think for us it would probably be in equities. I mean, underlying that, the idiosyncratic nature of the market today is much more stock specific versus asset class specific. It's a great thing that's happened this year, where stocks are moving on fundamentals. We kind of a little way through earnings. Good news is been treated well, and bad news has been punished. It's no longer low interest rates is the put on the market.
Right.
You've really got to know your fundamentals, and you've got to know your companies.
What category has the most attraction company to company? Is it the value trap category? Is it the value relatively cheaper? Is it the growthiness, whether the top line or middle of the income statement, or is it the overpriced joys that will have momentum forward?
I think that question depends on your time horizon. I think what we've seen year to four has been that the cyclical risk that folks have worried about has been somewhat unwarranted. As the cyclicals have reported, they've taken guidance down and stocks have reacted well. The more certain growth securities, I think people have overly relied on the resiliency of those businesses. So right now it feels a little bit more value versus growth. I would say this though, over the longer term, as you think through going through a recession at some point, nothing I'm calling for in the imminent future, at some point you go through a recession. And our view is you want to own growth securities through those environments, because when you come out of the recession 2 years later, businesses that are executing on believable growth and going after large total addressable markets end up with more revenues and more cash flow. So we always want to bet on the quality of the business and the quality of the management team, and of course the sustainability of return on capital.